imbalance, right? You're looking for a price imbalance. Now, what that means, a price imbalance is basically a fair value gap. And here's a quick tip when it comes to finding fair value gaps. You don't want to look for every single fair value gap. You're only looking for fair value gaps that are close to previous day highs or previous day lows. So from here, we actually had one on Wednesday. Right, so this was from Wednesday. This was late in the day on Wednesday, right? So there was the price imbalance right there. So I get a lot of questions about how I find key levels, and so I will use the candle before the imbalance right here, and this is going to be my key level, right? Those are the 4 steps to finding key levels, right? So that's sort of the main bread and butter to finding key levels. What I look for is I look for market structure, I look for targeted liquidity, I look for equilibrium, and then I look for my price imbalance right here. So once I've gone through the 4-step positioning process, I am confident that I've got my key level. This is the key level that I'm looking for, and vice versa, this key level and this key level. All 3 of these key levels came from the 4-step positioning process. Okay, so I just wanted to make that very clear so that people can understand. So let me clear the charts and let's quickly go over this. So once you've got your key levels, right, what's the next thing we're looking for? So again, if we go back to our presentation, if I go back to the presentation, right, once we've gone through positioning, we've got our key level, we now want to move on to price. We want to go on to reading price action. And so I was live in school, so this was the execution for that particular day, right? This was the actual execution. This was the profit, 1068.7, and this was the actual trade itself. So I took off, 1.8R, and then I closed the entire trade at 2.5R. So roughly about a 2R risk to reward, 1.8 to about 2R risk to reward, right? Roughly this sort of area. Then I watch price fly without me, which is just, I'm sure you've had that as well, right? We as traders are never happy about the outcome of any trade. If we make money, we wanted to make more money. If we lose money, we didn't want to lose the money. So we're never happy, right? So we want to kind of build processes, and we want to build SOPs and checklists so that you are, I guess, quote unquote, happy with the position. And how we do that, so I want to introduce you to the SOP that I use at Price Action Labs, right? So I've said this one sheet will change your life. If you use it consistently, it will. So this is sort of the process we want to follow. So let me quickly go through this with the traders. So let's see, right, let's break this. Let's quickly bring this up. If we go here, there we go. So this is the positioning process that we use, right? So let's bring this here. So this is what we call the 4-step process. So what we're looking at now specifically is this, right? We are looking at, if I bring this down over here, remove. There we go. So what we're looking at here is specifically the 4-step positioning process. So structure, targeted liquidity, equilibrium, and price imbalance. So once I've done all 4 of these, I want to then mark that out of 20. And I encourage every trader to download this checklist and use this checklist, right? You want to understand where is your market structure, right? So we've been through structural highs and lows. So we can tick that off out of 5, right? So that's 5. Targeted liquidity, we've understood most recent high, most recent low coming into Friday's position, right? So that would be a 5 because we're super clear on where the targeted highs and lows are. Where is the most recent high and low? Then equilibrium, right? It's very simple where we have an equilibrium here. So this is the structure high, this is the structure low. Anything above the 50% becomes a premium, anything below is a discount. So that's what the E stands for, equilibrium. And the final thing is price imbalance, and that's what leads to our key levels. And so we have identified a price imbalance here. We also had one here, we have some here, and we also had one down here as well. So these are all of our price imbalances, right? So I know I've gone through that quickly, right? I'm just going to become clear later on in the video, but we've essentially gone through the entire checklist. And because we've gone through the entire checklist, each of those are 5, the overall score for your key levels or your 4-step positioning process would be 20, or that's how I graded it on Friday. The reason I want you to follow SOPs and checklists is because this is the only way to actually become profitable. Having a 4-step system that you can repeat every single day, you can use that to journal your trades every single day, and from there you can make minor improvements towards your success, right? So once we have our key level, we then want to understand positioning, right? Or not positioning, we then want to understand price action. So this kind of large move over here, I'm going to be breaking it down. So this was the